Welcome to Newswire, news for Nebraska's farmers and ranchers. Farmers and ranchers are facing challenges of higher input costs, drought, and volatile markets. As we reach the mid-year point of 2022, Nebraska Farm Bureau senior economist Jay Rempe digs into farm financial conditions to give a view of how the agricultural economy is faring.
2022, you don't need to tell anybody that it's an interesting year. Lots of uncertainty, lots of volatility out there.
It was the best of times, it was the worst of times. A famous opening line from Charles Dickens' A Tale of Two Cities. It's how Nebraska Farm Bureau senior economist Jay Rempe describes the current financial conditions for farmers and ranchers.
On the best of times side, we've got crop prices that are high, or both crop and livestock prices that are higher than they were at the beginning of the year. Now they've come off a lot in the last few days, but they're still higher than they were at the beginning of the year. We've got export values that are up this year. Land prices continue to just surge. Demand for both crops and livestock seems to be hanging in there pretty good. So that's all the good side. The other side, the worst of times, is we've seen input costs just skyrocket as well too. Obviously inflation is up, interest rates are going up, that raises costs for farmers and ranchers. The economic uncertainty that's out there, that might cloud demand a little bit. And of course, here in Nebraska, we're dealing a little bit with drought.
As final numbers are compiled for last year, Rempe expects 2021 to be a record year for net farm income. But he says 2022 will be a different story, putting management and marketing skills to the test.
When you look at what's occurred in the input costs this year with diesel prices, fertilizer prices across the board, we're seeing some pretty high numbers. But fortunately, we've seen the commodity crop, or corn and soybean prices, earlier this year they were testing record highs. And so when you pencil it out, there are still positive returns if farmers were able to lock in part of their production in some of those higher prices. So there was some positive margins to be had, not to the level of last year. And obviously, it depends on how the rest of the year plays out.
Rempe says one of the best indicators of the underlying farm financial condition is land values. And on average, the per acre market value of ag land in Nebraska has increased 16% from last year.
So we've had about a year and a half now of land values escalating quite a bit. Depending on what survey you look at, we're looking at anywhere from 15 to 25% above last year in terms of increased land values. And I'm hearing some numbers out of Iowa for some land at $25,000 to $30,000 an acre, which is just unheard of. And even in Nebraska, we're anecdotally picking up. So I can't imagine that will continue at that level, but they're right now, they're doing pretty well.
Rempe says some of the other financial indicators he looks at is showing pretty stable and secure conditions for farmers and ranchers. He says loan repayment rates are higher, delinquencies are lower, and farm bankruptcies are down.
My opinion right now, they're a pretty good financial situation to weather that uncertainty that's out there now, that risk that's out there. I do have a little concerns as we move through the year. Now, fortunately here in the last week or two, we've seen oil prices pull back. We've seen fertilizer prices pull back a little bit. I hope that's an indication that maybe the prices and input costs are starting to settle out. I think the key will be moving forward as farmers look to try to price their inputs for 2023. And can the commodity prices stay at a level that'll allow some positive returns next year? So I think we're setting fairly well for this year. I'm nervous a little bit about next year and what it might bring.
Thanks for watching this week's Newswire. For more stories like this, visit nefb.org and follow us on Facebook and Twitter.